Investments that are environmentally responsible are rapidly becoming the norm. It is a method of investing that takes into account environmental, social, and governance (ESG) factors, which are identified as the elements that influence the capacity of a business to function in a world that is constantly evolving in a responsible manner. By aligning your investments with your principles, sustainable investing can help you achieve long-term financial success while simultaneously lowering your risk and potentially boosting your profits. This guide will lead you through all you need to know about sustainable investing and how it may assist you in achieving your financial objectives. If you are interested in learning more about sustainable investment, you can read this guide. What is sustainable investing? The goal of sustainable investing is to achieve long-term growth while simultaneously minimizing the potential negative effects on society and the environment. It is possible to identify stocks and funds that satisfy particular environmental, social, and governance (ESG) criteria through the practice of sustainable or responsible investing. Sustainable investors are looking beyond the numbers on a company's balance sheet to examine how enterprises influence their stakeholders. They do this by making investments that take into consideration social, environmental, and governance (ESG) factors. In light of the fact that the seasons are becoming hotter and more unpredictable, and that the dangers posed by climate change are progressing from the realm of potential to the realm of observable reality, consumers are increasingly embracing sustainability and looking online for environmentally friendly solutions. To say that there is opportunity for expansion in the market for sustainability would be an understatement. On the other hand, while investors seek to find strategies to invest in the future that are both realistic and profitable, it can be difficult to determine which movements are the most effective. Your current knowledge of sustainable and ethical investing will not only prepare you for the opportunities that will soon present themselves as a result of a world that is struggling with climate change, but it will also provide you the chance to be a part of the positive change that is occurring in the market and in the globe. The benefits of sustainable investing. The acronym ESG is an abbreviation that stands for environmental, social, and governance. It is a collection of criteria that investors and organizations use to evaluate the performance of a firm in these three important areas. When you engage in sustainable investing, you are able to connect your investment strategy with businesses and industries that place a high value on and work to improve the overall health of both mankind and the environment. Furthermore, sustainable investing has the potential to yield several financial rewards. This is the reason why asset managers are anticipated to grow their institutional investment that is focused on environmental, social, and governance factors by 84%, reaching roughly $34 trillion by the year 2026. Sustainable investment products. A wide variety of products are available for investors to examine, ranging from individual stocks to exchange-traded funds (ETFs) and real estate investment trusts (REITs). A diversified selection of products is available. Exchange-traded funds, sometimes known as ETFs, are investment funds that reflect a broad portfolio of assets, including commodities, bonds, and stocks. On the other hand, real estate investment trusts (REITs) are businesses that own, operate, or finance real estate properties that generate income. These organizations also provide investors with the opportunity to invest in a diverse portfolio of real estate assets. Sustainable investment strategies and best practices. By adhering to the best standards for sustainable investment, you will be able to effectively achieve both your financial and ethical objectives. In order to provide the groundwork for sustainable investing, it is necessary to first establish both financial and non-financial objectives. Establishing a framework for strategic planning and investment decisions requires you to define your beliefs, what your priorities are for sustainability, and what your financial goals are. It is recommended that you investigate impact investing, ESG investing, and SOI investing if you are looking for ideas. These ideologies are comparable, although they encompass a wide range of distinctions in terms of goals and behaviors. 10. Make it a habit to conduct thorough research that will keep you abreast of the most recent information regarding ESG investment, as well as evolving sustainable investing principles, trends, and changes in the industry. For the purpose of conducting periodic assessments of your portfolio, let your research to serve as a guide. Another thing to keep in mind is to steer clear of greenwashing. which refers to the practice of a firm engaging in deceptive techniques in order to falsely market its products or services as being environmentally friendly. It is possible to avoid investing in companies that engage in greenwashing by carefully examining the sustainability claims made by a firm and making certain that the company complies to the best practices recommended for sustainability. Corporate governance in sustainable investing. When it comes to sustainable investing, corporate governance emerges as a crucial aspect that plays a significant role in determining how businesses handle environmental, social, and governance (ESG) factors. Considering the growing awareness among investors of the importance of incorporating sustainable practices into their portfolios, corporate governance practices have emerged as an essential component in the process of evaluating possible investments. ESG criteria integration. Corporate governance challenges sustainable investors conduct a thorough analysis of corporate governance systems in order to uncover potential problems that may have an effect on a company's ability to adhere to environmental, social, and governance standards. In this evaluation, governance practices such as board diversity, executive compensation that is connected to sustainability goals, and transparent reporting methods are crucial components to take into consideration by the organization. Shareholder engagement. Participation of shareholders in shareholder activism. Investors who engage with companies through shareholder activism have the potential to promote improvement. This entails taking an active role in the decision-making processes of the corporation in order to push for improved sustainability practices. Participation from shareholders contributes to the development of a collaborative approach, which in turn encourages businesses to align their strategy with sustainable objectives. Environmental benefits. Green business models and renewable energy. Corporate governance that places an emphasis on environmental benefits, such as the implementation of sustainable business models and renewable energy sources, demonstrates a dedication to the long-term viability of the organization. Companies that have a beneficial influence on the environment are frequently sought after by investors, and these investors frequently search for governance structures that support and promote these activities. Board oversight on ESG. At the board level, environmental, social, and governance considerations. Corporate governance that is effective guarantees that boards have oversight and accountability for environmental, social, and governance (ESG) factors. This comprises the establishment of committees or institutions that are dedicated to sustainability, with an emphasis on the incorporation of environmental, social, and governance (ESG) factors into the processes of strategic decision-making. Transparency and reporting. The practice of reporting on environmental, social, and governance (ESG) metrics in a transparent manner is an essential component of sustainable corporate governance. On a regular basis, businesses that are committed to sustainability reveal their environmental and social performance. This provides investors with the chance to make informed decisions that are in line with their values and objectives. Community and social responsibility. Sustainable corporate governance goes beyond the standard operations of a firm and incorporates community and social responsibility. Community investing is an example of this commitment. In accordance with the overarching objectives of impact investing, investors may provide preference to businesses that have governance practices that make a positive contribution to the well-being of the communities in which they operate. Corporate governance will continue to be an important component that plays a role in determining investment decisions as sustainable investing approaches continue to develop. Investors that are devoted to having a beneficial impact on the environment and society, particularly those who engage in sustainable investment methods, should examine corporate governance processes to ensure that they are aligned with their sustainability goals. In conclusion, the incorporation of corporate governance issues into sustainable investing strategies improves the capacity to bring about constructive change in the business sector while simultaneously accomplishing financial objectives. The landscape of sustainable investing is expanding, and as a result, the importance of strong corporate governance procedures is becoming increasingly crucial for individuals who are investigating a variety of sustainable investment assets.